Analysts say it will take years for Shopify to really compete with Amazon in logistics and compliance. Changes are on the way for Shopify's fulfillment network in a rare pivot for the e-commerce giant. These changes come at the end of a multi-year trial period that frustrated Wall Street analysts at times. Things haven't inflected upwards, which, for a company of Shopify's stature and the expectations that come along with it, is viewed as a disappointment. Ken Wong, an analyst at Guggenheim Securities, said Shopify last week terminated or reduced the scope of its work with several warehouse and fulfillment partners. Executives at 4 companies in Shopify fulfillment network told Insider. Shopify has relied on partnerships with third-party logistics and fulfillment partners to power the network since the company launched the program in June 2019. The company said in an earnings call that year it would invest $1 billion over the following 5 years to build it out. Since then, the company has shared few hard details about how the program has been performing, and said repeatedly that it was still in the product-market fit phase. Last week, the company informed merchants using Shopify fulfillment network that special requests would no longer be supported after March 21st, but that upcoming changes to the program meant that they would have access to key benefits like two-day shipping without express costs. Analysts and other industry insiders are now speculating that Shopify may be moving away from its initial asset-light approach and making more aggressive moves in fulfillment. Whether that means acquiring third-party logistics companies, moving to operate warehouses on its own, or operating some kind of hybrid model. A Shopify spokesperson said the company would share more details on its plans for the network during its fourth quarter earnings call next month. But the relatively long test period and lack of measurable results along the way was a surprise for some analysts who are accustomed to seeing Shopify deliver on new programs with ease. For example, Shopify this month launched its banking product, Balance, after it began testing it in early access mode in 2020. 3 to 4 years is a nice, comfortable amount of time for them, Colin Sebastian, a Baird analyst, told Insider. But given the speed of e-commerce and how quickly things are changing, that was a long time. He added, Shopify Fulfillment Network is also still available only to merchants who apply and are accepted into the program. I think by now the hope would have been that they had figured out product market fit and could go to market in a more aggressive fashion, Wong said. Until they remove the velvet rope and let everyone participate, I think investors are still going to have a more conservative view of what fulfillment could be. That's a big change in terms of how most investors were thinking about this 2 years ago. The network was positioned as another way that Shopify could help merchants compete, as it promised quick delivery speeds and low costs. At the time of its launch, Wall Street analysts were excited about the possibility that the network could lead to the company competing more significantly with Amazon, which has a vast fulfillment and logistics operation across this. In September 2019, the company announced it had acquired the fulfillment automation startup 6 River Systems for $450 million. Over the next 2 years, 6 River Systems built fulfillment management software to complement robotics. Sebastian said it made sense for Shopify to first test an asset-light model given that the company's expertise lied in software. He added that fulfillment was becoming more important for e-commerce players to master as competition grew. It's something they can offer as a service for their merchants and brands that rely on them for their e-commerce businesses, Sebastian said. We're all evaluating this from the outside looking in, but I think it's been tough for them to scale, he added. Some analysts have also expressed concern about the intense investment that would be required if Shopify chose to insource its fulfillment operations and compete with Amazon direct. Sebastian said in a memo that it took Amazon billions of dollars to build out its fulfillment and logistics operations. Ygal Arounian, a Wedbush analyst, put it a little more bluntly in a note to clients. Shopify is nowhere close to building a type of fulfillment operation at the scale of Amazon, and investors should not expect anything like that in the near term. Company leaders have acknowledged that fulfillment is filled with unique challenges. Logistics is hard, COTOBILTKE said when asked during a 2020 earnings call about the frictions that merchants faced. You will hear it from everyone in the logistics world. But it's hard.